Good morning, everyone. We're going to talk about the angle of descent today. We spoke about the angle of ascent prior day, and then we had a big move down last week for many big stocks. Amazon reported on Friday. It reported better than average expectations from the retail side, and a lot better from the buy side. So the buy side is very happy, retail side is happy, and suddenly Amazon is gapping down because projections from the retail side say that it can't sustain this gain. It's going to start declining in 2026. Well, 2026 is a long ways off, and there are things happening in Amazon that the average investor and the analysts on the retail side don't know about. And there's a lot of things going on. Amazon is a big company, and it's a benchmark company. It's not just about selling products to consumers. It's moving into a lot of different areas. Currently, this price is below its fundamentals. So what's going to happen? The dark pools are waiting. They're just waiting. Let's see how far it can go. We can really get a bargain price and then stock up on this stock because we know things about Amazon that nobody else knows. So it's a huge gap down, not on news. That was the news day that it came out. It's gapping down on fears of tariffs. It's gapping down and running down on fear of a possible event. And so we have an angle of descent that is just sheer cliff fall off. Just throw Amazon over a cliff and it's falling. It should find support somewhere in this area because this is the prior fundamental levels, and the fundamental levels are higher at this point, right around in here. So dark pools are going to wait, and they're just going to sit here and say, okay, let's let the retail traders and smaller funds managers and everyone panic and sell and dump. We've had a small funds management company dump Thursday and Friday on tariff news. Tariff news is not set in concrete. It is very variable. It changes all the time. Sometimes it's on, sometimes it's off, and it's often a future event. What we need to focus on is what is happening in the company right now, what is going to happen in the near term, so we can plan and adjust to that. This is no longer a sell short opportunity. It may go down further, but the buy side institutions are sitting around waiting someplace in this level right here, because this is a bargain price stock for the Amazon, and they will buy more inventory because of what's going on in the background that nobody hears on the retail side. All you hear is fear and doom and gloom. While the market is in fear and doom and gloom, the dark pools are buying and buying. So this is a sheer cliff angle of descent, and it will not sustain for very long because it's too fast, too furious, and it's gone beyond the fundamental values. You need to use your stock charts to see the fundamental values. It's very hard to use fundamental values. You can look at the yearly, and it's about each year it's gone up and up, and you can look at the earnings, and it's been going up and up quarterly and yearly and strong. No sign yet of a deterioration. And so this gap down is just based on something that has not happened yet. You can't trade stocks on the future. You have to trade stocks on the now. This is the now and what is going on now with this company, not what's going to happen in 2026. Who knows what's going to happen in 2026? Trying to predict the market that far out is just ridiculous. We forecast like weather, and we're able to do a really good job of forecasting. And then we also follow and pay attention to the dark pools and what they're doing. We have professional traders selling short, but they're getting down to the bottom of this chart. And when it gets down to a certain point, that thing is going to come back up because the angle of descent is too steep to sustain. And it's not a percentage. I know a lot of you love percentages. It is simply the value of it. It's the laws of physics. If something goes at a certain rate of speed, it will diminish that speed and stop and reverse at some point. You have to remember that there's physics involved in the market because there are human beings, and human beings are making these decisions, not necessarily AI all the time. They make the decisions as to how to place various orders, like TWAPS, time weighted at price, or VWAPS, volume weighted at price. And we had a huge surge of volume on Amazon on Friday, just massive, massive, huge red volume to the downside, crash. And of course, then everybody on that hears about this over the weekend because they weren't paying attention because they were out camping or whatever, because retail likes to go on vacation. And we're here today and they're going, oh no, I need to sell. And already there's a little buying going on supporting Amazon at this level because it's now below its fundamental values. Doesn't matter what the analysts are saying for next quarter, who cares? You should not care at all. But retail does. Retail investors and retail traders react. And retail investors who are long-term and with 401ks own an awful lot of ETFs. So they may be selling some of their ETFs in sheer panic, thinking the world is coming to an end. But let's face it, folks, we've been talking about tariffs now for 7-8 months. And it isn't going to go away. And it isn't causing a collapse of the market because it keeps changing. We'll talk about it on August 7th. Oh, we'll talk about it August 30th. Oh, we'll talk about it in September. Oh, we'll talk about it in October. It's just get used to it. It's the new normal. You need to pay attention to your charts. And there was a little warning here that you would not hold this for a gap up. Okay, but it wasn't because the earnings were lousy. It wasn't because the revenues were lousy. They weren't. They were in good form. And this company is not doomed because it's just a consumer product, buying a lot of things or selling a lot of things through China and other companies in other countries. We have a lot of other things going on in the background with this Amazon. Dark pools will at some point come in. They may not come into here. They may not come to here, but we're going to see that. So this is no longer a sell short opportunity. I know this kind of looks like an engulfing white, but look at that tail. Yeah. And look how close we are here. And look at the angle of descent. This is steep. This is steep. And it will come back. Steep comes back. Steep comes back. You can see that all the time. This is a slower move up because it was quite accumulation by the dark pools during a time when everybody thought that Amazon was doomed for all eternity to disappear off the face of the earth, which it's not going to do. It's kind of cute how people fear what might happen rather than reacting properly to anticipating what may happen, and the high degree of probability one way or another. The high degree of probability is that the stock will catch with buy zones and support from the buy side institutions at some point. So trying to sell it short right now is not a good idea. Buying it long is not a good idea either. We got to wait and see where the buy side catches it. And then we can know the action that's going to happen. Angle of descent is very important to keep a track of and pay attention to. I want you to be aware of it. I also want you to be aware of the angle of descent on your indicators that are very important. I'm going to try to add volume indicators as well so that we have more to look at in the future. So stay tuned for more information. Remember that your charts have every piece of data you need to study. From technical patterns, entry signals, exit signals, stop loss placement, buy zones, sell zones, all of this is in the stock chart as well as earnings. What fundamental values are present at this time? The stock is below its fundamental values. So it's not, and it's obvious where the fundamentals are based on the fundamentals that were reported. So you use your stock charts and you study your stock chart so that you can read it like a roadmap, because it is your navigation system for the future, near term. We're always talking about near term, and we are never, ever, ever trying to predict. We are forecasting for the next few days. I'm Martha Stokes, and that's my topic for today.